Hi, welcome to another market update, and we'll do a little education also in this video. And as you know, candlesticks are not only good for trading, short-term trading, whether intraday or swing trading, but for investing. And one of the things I like looking at is trend lines, and lots of ways to use trend lines for your investing. So, and by the way, I'll give you my current outlook on the S&P in a couple of minutes. But let me go through trend lines here. So, we know about resistance. Here we have our horizontal resistance. So that's one way you could use a trend line. Here we had resistance. This is the cash S&P up here around 2150. Another way to use a trend line is old resistance. Once broken becomes support. As you know, this is when we became bullish on the breakout a few years ago with the price that said we're wrong with a close under the prior resistance. So old resistance trend line, once broken, becomes support. And let's look at some trend lines now and some current action. So recently we had a hammer, lower shadow, twice the height of the real body. And notice the support area. This was, by the way, a bullish morning star. Here was the support area. And the market closed under the support area. So by closing under support, this was the bear's chance to take control of the market. And yet, the next few sessions, the market bounced back. So this is a crack and snap confirmed by a close. A crack and snap was when the market breaks support, especially on a closing basis. So you had some support here, here, and it closed just about a little bit under the support here. It held the support here, but it did move under the support intraday. And the next session, it was still holding under here. But on this session, it showed us the bears were unable to hold control of the market. So with a crack and snap, the target normally is the most recent high, so that could be up here. Now, what happened is over the last week or so, the market was in a box range. So one had to be cautious here because, yes, we had a bullish hammer, a bullish crack and snap confirmed over here, but the market was locked in a range for about 4 or 5 days. So now if the market broke above this resistance area over here and over here, what should happen is this old resistance should become support. So this is my first support area, the second support area, and on a longer term perspective, if the market closes under the low here, then I would turn bearish again. But right now I'm actually neutral to short-term bullish thanks to the crack and snap, thanks to the breakout of the week-long trading range over here. But there's always a price that says we're wrong. And as long as it holds above, I'd say the 1800 in the cash S&P, I think the short-term market looks fine. Short-term S&P looks fine. Doesn't preclude the possibility of coming down again to these support areas, but now this is key support. Okay, thanks for joining me.